Hello everybody and welcome to this week's Market Minute with Uncle Gary. A lot has happened and we did get a good amount of feedback from the previous video asking about what's going to happen in the property market. So I think there's going to be a lot more content relating to the US market, but for the purposes of what happened last week, I'm going to focus on the Canadian market for this video. And you know, something happened that frankly, I'm at a bit of a loss as to why it actually happened. So let me go ahead and explain what I'm talking about. In the Canadian property market, we've seen very, very high property price growth over the last probably 10 years. It's been an outstanding performing investment if you've invested in it, but it has pushed the affordability of houses well out of the range of most people in Canada. So the people who are able to afford houses have probably either had a house or are, rolling investments into their houses, one on top of the other, like lending money on an existing house that they already owned and then buying a new one. So that's been the nature of what the housing market has looked like in Canada. And then what I will say is a lot of people ask me, Uncle Gary, is the property market going to go down in 2023? And I think it's important to start the context of this particular video with the fact that we're already down. I think in just December, the property market dropped about 1.3% in December 2022. And that means from the peak in early 2022 to now, we're down about 16 or 17%. So yes, the prices have already started to cool off. But there is an important aspect here. The prices were crazy high to begin with. And I'm not one to, to create more emotion about something that's a financial topic. It's not an emotional topic, it's a financial topic. But it is fraught with emotion because everyone's interested in their investments and they want a home. And, there's a lot going on in this topic. But the point being, the house prices were crazy high to begin with. And yes, they're already down a little bit. I also don't think that the blanket term of the property market in Canada is actually a very useful term here, because every market has its own uniqueness. So the Vancouver market has its uniqueness, the Calgary market has its uniqueness, Toronto has its uniqueness, Montreal, etc. across Canada. That all being said, a really interesting thing happened this last week. The financial regulator, the financial watchdog that regulates the lending industry and things like that, is called OSFI. It's the Office of the Superintendent of Financial Institutions. And basically what they did was they put out a position paper or a proposal paper to say that they want to change some of the rules related to mortgages and lending volume and lending values and so on. And just to give you, without drilling too deep into it, I'll give you the brief summary of what they covered off. They covered off loan to income, so the amount you're allowed to loan compared to your income. They covered off debt to income, how much debt you're allowed to take on in total. And then they covered off like new interest rate affordability stress tests, or how much you have to qualify for. Even if your mortgage is going to be below that, you have to qualify for a much higher mortgage rate. And then lastly, debt service and coverage restrictions. So that's in a nutshell what they covered. It's all really just to limit how much debt you can take on or you should be taking on, and to limit the financial institutions from lending to people who are over leveraged and that kind of thing. Now, I don't know exactly why this happened last week. I don't know whether it's an optics thing, they needed to be seen to be doing something, but in all honesty, I'm left without an understanding of this. I have no really good reason why they did this now. The obvious reason is they obviously want to change how people are lending money against properties. But the timing of this, the timing has left me almost speechless. I just don't understand why they would do this now. What I'm talking about is in 2021, we had rising prices where the housing prices were rising 3% a month. And OSFI didn't have anything to say. There was no conversation about it, no one minded. We were having rampant house price growth and really, really unbelievable increments in house price values, and nobody said anything from OSFI. So it wasn't even a discussion. We're now what should be 8 years into one of the biggest market growth bubbles we've seen in Canadian housing, and now after 8 years OSFI's got a view that they should be doing something about it. So to me it seems a little bit of a day late and a dollar short, to say the least. And then to limit the amount of loan to income to, I think, 450%, or basically 4.5 times your income. So in terms of limiting the loan to income ratio to be less than 450% or 4.5 times, that could be a really interesting scenario where if you earn $100,000 or even $150,000, what is a pretty good salary by Canadian standards, you may not be allowed to borrow more than 4.5 times or $675,000. That may not be enough to buy a small condo in some cities. So it could place a real sticking point to people owning properties if the regulator actually limiting who's allowed to borrow that money. So it could cause another situation where it pushes borrowers to alternative lenders. And what I mean by an alternative lender is not the traditional big bank, high street lenders. It could be to either private individuals who are taking money out of their properties and lending it privately to someone, or it could be a group of investors who pool their money into a mortgage investment corporation and then they sort of lend it out in tranches to people. But even now we're seeing that situation unravel a little, where alternative lenders have been calling in the loans or even not renewing them, choosing not to renew. An alternative lender has no necessity to renew a loan they happen to have given you. So we're seeing people, being forced to sell to a degree so that they can pay off a loan that they took from an alternative lender or a mortgage investment corp. And suffice it to say, that's going to cause some unusual behavior in the market. But I'm not exactly sure why OSFI did it at this stage. It seems like a strange thing to do. And what I'll leave you with, just to close off the topic, is that I believe OSFI can see inside the banks much more clearly than we can from the outside. Obviously, they're a regulator, so that's their job. So for them to be coming out and doing this at this time, let's just say that they probably are seeing something that they don't like and they're not very happy about it. I know that the banks have been meeting lately to talk about how many mortgages exactly are vulnerable here to people being underwater, where the value of the mortgage exceeds the value of the property and things like that, because the prices have gone down or the interest rates have gone up and so on. So it's going to be a really interesting time. And the last point on the Canadian property market is, I don't think everywhere will go down the same way. I think areas that are not that desirable and weren't that desirable had people buying just to say that they could get started in the property market, like they just needed to get anything, so they were buying frantically in 2018, 19, 20, 21, and people were jumping on the treadmill of the property game just to get access to that capital appreciation. And that, I think, we're now seeing a welcome end to that kind of crazy frothy buying, where there were bidding wars upon bully offers for people to buy anything. Areas that are not that desirable will see a really big cooling off of their prices, and areas that are desirable, things like cities, I believe, even during the pandemic times, cities have worked for 10,000 years. Cities have been a useful place for people and humans to connect and gather. So I'm still reasonably comfortable owning investment properties in cities. And with that being said, I think those won't cool off as much, despite the amount of supply coming online and all of those narratives. I think people who have closer to city and suburban areas, in desirable areas, I still think those will be worthwhile, but only time will tell. So thank you for joining me. Don't forget to like and subscribe if this value was useful to you, if this video was of value and useful to you, and I look forward to seeing you again in the next one.